Hi there, welcome to our fourth and final part of our series. Today, we're going to be talking about sole proprietors, bloggers, and freelancers, and how to stay organized, how to handle taxes, and how to maximize those expenses. Normally what I see is at the end of the tax year, a sole proprietor collects some of the receipts that they can remember and shoves them into a shoebox and gives them to an accountant. But that's not the best idea because you have to be way more proactive than that in order to actually maximize those expenses and get that tax bill down. Rule number one, in order to expense it, you have to have proof of payment. This could be a ticket stub or a transit receipt, a good old-fashioned regular receipt, or maybe an invoice. Sometimes having just your credit card statement is not good enough because let's say that you went to a big box store and you had $60 spent there. How does the government know if you bought clothes or if you bought stationery? You have to actually have the receipt that proves the purchase was for business. When in doubt, keep the receipt. You should have every receipt for almost every transaction, debit, cash, or credit that you spent throughout the whole year, and then you can sort through them at tax time if you don't like to actually be on top of it every week. There's a lot of confusion around when something is a business expense and when it's a personal expense. Basically, here's the rule of thumb. If you needed to spend that money in order to help your business earn profit, then it's an expense. Every receipt, you can ask yourself, did I need to spend this money to better my business profit? And if the answer is yes, then it's an expense. So a lot of times there's a lot of confusion when it comes to food, drink, and entertainment as to whether it's a personal expense or a business expense, because we definitely take personal enjoyment from those types of expenses. You can expense 50% of all food, drink, and entertainment bills as long as you needed to spend that money in order to better your business and earn profit. These would be things like meeting for coffee with a client, taking a supplier out for dinner, or taking a client out to a hockey game in hopes that they'd sign a contract. Another thing that you can expense is if you do go to a networking event, you can expense not only your fare to get in, but also if you've bought any food or drink while there, that counts as a business expense as well. So here's the deal with alcohol, because I know that I always get this question a lot. You can expense alcohol. It's not illegal. However, keep it within reason. So if you were to show a receipt saying that you took 6 glasses of champagne, I don't know if that would be very convincing in an audit that you were there for a business expense. Definitely keep it at a 2-drink maximum for yourself. Transportation is another expense that there's a lot of murky water around, and we really need to be clear about how we can expense it and definitely to maximize it. So most people know that if your main form of transportation is a car, there's a portion of that that you can expense for business. But not all of us freelancers have cars. So what do we do then? Well, we're either using public transit, we're using auto share or Zipcar, or maybe we just have a bike. If all of these things from a car to a bike have a business merit and you need to use one of these modes of transportation for your business, then you can expense a portion of it come tax time. And here's how. All you have to figure out is the portion of usage that was for business only. The easiest is to start with a car. Kilometers for your business divided by total kilometers in general, that's the portion of all of your car expenses that you can expense. These are things like repair and maintenance, gas, license and registration, lease payments, insurance. All of those things can be written off, but only the portion of them that were for business. The rest of it's for personal and therefore not a business expense. Now, the same principle goes for all 3 of these different types of transportation, except public transportation has something else I want to show you. Public transportation, you can write off 100% of any ad hoc random transit passes that you needed to buy for business. So if you're on your way to some sort of meeting and you paid for the cab, that counts 100% as an expense. But if you have a public transit pass, there's a couple of things that you can do. Number one, check with an accountant or an advisor. If there is a public transit tax credit, you might actually get more money from just having it as a personal tax credit rather than a business expense. But if not, then you do the same thing. You figure out what portion of each time do you actually spend with your public transit pass for business only. And that's the portion of whatever you spent every year that you can expense. The same goes for auto share or Zipcar. If you're borrowing a car specifically for business that day, the entire thing is expensable. However, your membership is something that you're going to have to prorate over how often you use Zipcar or auto share for your expenses. The best way to do that is just to keep track of all of the different kilometers that you've actually ridden for for business. And then lastly, this one surprises a lot of freelancers and bloggers that I meet. If your only form of transportation is a bike, then that means that it's necessary for you to earn a profit if you have to go to and fro. So any repair and maintenance that you would actually have on that, if it was necessary to keep your bike in tip-top condition, helmets, all that kind of stuff, you list out your expenses for the bike, you find out what proportion of the bike was actually used for business, and then you can expense that as well. So there's a lack of clarity around what you can expense and how you can expense it for home office expenses. And this is important because it's a big one for us. So here's what you can expense. Mortgage insurance or rent, utilities, maintenance and repair, and property tax are all things that you can actually sum together and make one giant expense for your house. Let's give an example. Let's say that these are my monthly bills and I owe $1,200 every single month. That would be an annual expense of $14,400. So first of all, we figure out how many hours per day are we actually in the home office. So for me, it's 8 hours and I work 6 days a week out of the house. Then lastly, we figure out the space. And there's 2 ways to do this. So the first way is to actually figure out room by room. Let's say I have 4 fairly equally spaced rooms in the house and my office is one of them. Then it would be 1 room out of all 4 rooms in the house. Or I could actually use the square footage. So let's say that my room was 200 square feet out of my place, which is 1,000 square feet. Then that would mean that I would have 200 square feet over 1,000 square feet. This is 25% and this is 20%. So I'm gonna choose this method to actually calculate out my home office expense. My annual total housing costs are $14,400. I multiply them by 8 over 24. I multiply them by 6 over 7. And then I multiply them by 1 over 4, which is out of all of that, I can expense $1,028 off of my tax bill. So as you can see, it's really important to keep and track all of your expenses so that you can actually lower your income every single year on your tax bill. So let me know in the comments below, any entrepreneurs out there, what are your tactics to stay motivated, to stay on top of your receipts, and actually track your expenses? I'm Shannon Lee Simmons, and you're watching Money Awesomeness on Coral. Don't forget to subscribe, follow me on Twitter, and tune in next time. I'm going to be doing a special series on online dating and how it's starting to affect our personal finances. So stay tuned for that.